Hi guys, this is Alan from Pacific Financial. How are you today? So for today, I just wanna bring out one of the most strategy or technique, which is the Martingale strategy. The Martingale strategy is basically just to trade, just to place a multiple trade if the price is going against you. So for today, I will show you how to do it and something that you need to keep in mind when using the Martingale strategy. So if you're interested in the Martingale strategy, make sure to watch this video until the end and then get an idea on how you can use the strategy and what you need to be careful, what you need to keep in mind when using this strategy. So first, I'm still gonna use some technical indicators for me to analyze the market. So I will be using the GMMA and MACD for today. So let's set up the indicators first, and then I will talk about the Martingale strategy later. Okay, so go to technical indicator. So yep, just that little guy right there. Click on it, and then we'll select the GMMA. So that's the first indicator we want. So yeah, so the GMMA is on default, so nothing to change for this indicator. So next we will go to the oscillator. Yep, go to oscillator, and then we'll select the MACD. So put a tick on MACD. Yep, put a tick there, and then we'll open the drop down for MACD. So now the parameter we are using is 5, 35, and 5. So again, EMA 1 is 5, EMA 2 is 35, and signal is 5. So now we are all set, and then we can close this window. So close it. So okay, so for today, I'll be trading with a short-term period. So I'll be using a 10 seconds chart to trade with a 30 seconds option. So again, chart period is 10 seconds and option period is 30 seconds. So we are all done, and now we can just browse on the market and then just to see which one to trade with. Okay, so in here, so just talk about the strategy a little bit first. So the GMMA and MACD is a trend following strategy. So in order to use this strategy, we first need to identify that the market is in a trend market. So in here we see that the red lines are above the blue line and the candlesticks are heading upward overall. And then if we take a look at the MACD, we see that the two lines in MACD is been above the zero line for a period of time. So now we see that the market is in an uptrend. So next we'll be taking a look at the GMMA, the red line. So now you see that it's compressing all the way. So we are just waiting for it to expand. So before it expands, we will be looking at the MACD, and then if the two lines cross over and gives me a green histogram, and then after that, if the GMMA expand, which is now, and then I will place a trade. So that's how I use this GMMA and MACD strategy. So now you see the price is going against me, so I place a second trade here. So the basic of this Martingale strategy is that you will be placing a triple amount of the previous trade that you make. So in the previous trade, I trade with $10. So in the second trade, I'll be trading with a $30. So now the price is still going against me, so I'll place a third trade with $90. Okay, so I placed a third trade. So just one tip for you to use this strategy is that try to place your next trade while the previous trade is still going on, so that you know how many trades you have placed. So yep. So now yeah, it's still against me. So we'll see how this one ends. If this one ends, I will be having a even though I lost the previous two trades, if I get this one in profit, then the profit of this trade is gonna cover the loss of the previous two, and that is the advantage of Martingale strategy. So well, it was ended and it was in profit. So just looking for other currency pairs, see if it's in the trend market. So it seems like the market is now the trend is ended and most of the currency pairs are now in range. So I would be let me change this strategy to a range market trading strategy, and then I will show you another example of the Martingale strategy. So okay, so well, I will change the strategy. I will change it to Bollinger Bands with MACD, which is a range market trading strategy. So go to technical indicator. I change the strategy. So technical indicator. Okay, so well, we select the GMMA, and I will be selecting the Bollinger Bands. Okay, so well, I will close the window. So well, the timing for you to use the Bollinger Band is when well, in this one here, I'm just waiting for the price to touch the lower band, and then okay, so now it touches the lower band, and then I'm just waiting for the MACD to cross over, and then gives me a green histogram, and then by that time I'll be opening a high option. So well, just one more thing for the Martingale strategy is that you need to know that the Martingale strategy is not a risk management technique. It's a strategy that for you to maximize your profit and to turn loss into profit. So that is not a risk management strategy. So okay, so well, I will place a trade here. So okay, so with $10 for the first trade, and then I'll be placing a second one with $30 if the trade goes against me. Okay, so it's now against me. I will place a second trade. So see if it's moving upwards. So okay, so that's another tip here for you, is that you only use the Martingale strategy when the price is against your option. You don't use it when the price is moving towards to your direction. So just to keep that in mind, that's really important. So and the good thing for Martingale strategy is that even though if you lost the previous trades, if your third trade is ended in profit, then the profit of the third trade is going to cover the loss of the previous two trades. But then the bad thing for the Martingale strategy is that if you are not, I mean, if the price is not in your favor, then you will have a chance to lose all three of your trades, and then the loss amount is gonna be pretty big. And then well, if you want to use the Martingale strategy, you do actually need to have a bigger amount of capital balance in your account, so that you can actually execute a proper money management. So that's one of the important things for the Martingale strategy. So you need a big balance for you to use this strategy. So just to keep that in mind. So well, now the trade was finished, and I will take a look at the history for today. Okay, so well, for today I make what 6 trades. That's a lot. So well, so 2 sections actually. So I used the Martingale strategy twice, and then both session was ended in profit. So it was not much. The profit amount is not much, but I have $46 profits. So that's how the Martingale strategy works. So it covered the third trade's profit is going to cover the loss of the previous 2 trades. And then just one more note for the Martingale strategy is that the maximum numbers of trade that I suggest you to make is 3 times, so that even though you lost your 3 trades, you're still gonna control your loss. So that's one of the emotional control as well. So you don't just keep making trades to try to cover your loss. So that's one of the important part of the Martingale strategy as well. So just to try to keep that in mind. So okay, so well, if you do have any question on the Martingale strategy, feel free to leave me a comment down there, and I can get back to you with an answer. So well, again, because just a really important note here is that if you want to use the Martingale strategy, just try you need to have a large amount of balance of capital in your account so that you don't blow your account within one session or two sessions. So okay, so well, that's pretty much for today. So well, if you like my video, give me a like and subscribe to my channel for more live trading video, and I will see you soon again tomorrow. Bye.